What is TRC?
TRC stands for Tax Residency Certificate. This is typically a certificate that is issued by the country in which the person is living outside India, which has their personal identification details, their period of stay, their residency details, and the requirement of showing that they are a resident in that country.
What do you mean by DTAA? With which countries does India have a DTAA which are tax efficient?
Right, so DTA stands for Double Tax Avoidance Agreement. India has a DTA agreement between various countries, so India, US, UAE, Singapore, Sweden, etc. But the point in case here that we are discussing today is the tax efficiency that India has with specifically three countries, which is Singapore, the Middle East, and Mauritius. Right, so India has tax efficiency with these three countries, and what we mean by tax efficiency is basically the income that arises for these individuals who are living in that country is actually not taxed. So like in the Middle East and UAE, there is nothing like an income tax, there is nothing like a capital gains tax, right? But for countries like the US, etc., there is capital gains tax, and although India has a DTA between India and the US, there is a different format of analysis for such capital gains. But when it comes to Singapore, Mauritius, and the UAE, because there is no tax to be paid by these countries, and the income, even if it arises in India, the using the DTA agreement and ensuring that even the TRC is in place, sometimes you need to ensure there will be no tax that is to be paid by the person.
What are the documents you need to claim DTAA benefits in India?
Right, so to claim the DTA benefits, you need your TRC, which is the Tax Residency Certificate, Form 10F, which is prescribed as per the IT rules, the self-declaration of ownership and residency, and the PAN card, which is mandatory to avoid higher tax deducted at source.
How can NRIs benefit with a TRC on TDS?
Right, so NRIs can benefit, having a TRC. So typically, the TDS rates are the highest for NRIs. If they have a TRC, the TDS rates would be much lower. So for example, if an NRI earns interest income, typically without a TRC there is a 30% tax deduction at source. With the TRC it's between 10 to 15%. And say he earns again dividends from mutual funds, again without a TRC it's at 20% TDS, and with the TRC it's only at 10%. So it is therefore beneficial for the individual to obtain a TRC. The person who is living outside in India needs to apply with their resident state to apply get a TRC, and typically the TRC is either given calendar year wise or financial year wise depending on that country's rules, and there is a cost. So the cost goes between 20,000 INR to about 60,000 depending again on the country of residence where the TRC is issued. We use this for clients which who have large portfolios and who plan to make changes on the portfolio. By purchasing the TRC certificate, we are trying to ensure that tax minimization and no tax has to be paid, especially for individuals who are part of these three countries.